Hey, great to be here, everybody. From my perspective, I'm, as just announced, but to tell the difference between the two of us, I'm Richard Muirhead, managing partner at Fabric Ventures. We cover Europe, but my kids are at school here in London. Let's put it that way, and we're more on the kind of venture capital side of this sort of ongoing revolution. My background was in building a couple of different software companies, one of which actually listed on the London Stock Exchange back in 2000. I actually was fortunate enough to get involved in investing in Bitstamp back in 2013. And indeed, fortunate enough to work with BitGo quite a few years ago now, and working with Bitstamp to really move them forward. So have a tremendous amount of respect for what BitGo has built. And I think it's extremely exciting to sit here this morning and hear the discussion of where everything is headed, and see such an attentive and professional crowd gathered on a Monday morning, despite the storms and everything else that gets in our way. But I want to move directly now on to Peter and allow him to maybe introduce himself. He's got this, I think, a super interesting combination of experience as a professional in the capital markets, but also in building a startup, which is something I always have a huge amount of respect for, having played in that space for a long time. Peter, do you want to tell us a little bit about yourself?
Yes, thank you. It's great to be here. Thank you all for coming. I think it's a great venue, and you've heard from some great folks already. I thought Danny Masters was terrific this morning, and we share a lot of similar views, and that might just be because we're guys who've been around for a while. But my background, as mentioned, is mostly traditional finance. I spent 20 plus years working at a couple of the larger investment banks, ran the emerging markets businesses for a couple of them, which was really how I found my way to crypto. If you've spent a lot of time in emerging economies, you get the store of value use case and the importance of that, and that's what kind of led me originally to Bitcoin. I was fortunate enough to be introduced to a guy named Wences Casares, who's truly one of the OGs of this space, the founder of Zappo, and I joined that business a little over 2 years ago and built their institutional business, which we then ultimately sold to Coinbase, and then about 6 months ago I joined BitGo. So I'm, for lack of better description, as these firms grow and they try and add kind of Wall Street folks or folks with that background that understand.
Ladies and gentlemen, might I please remind you that the ballroom meeting has now commenced. If you could please make your way to the ballroom.
That's absolutely the voice of God.
Yes, it really is. God's an interrupter.
Yeah.
So the role that I play, or I'm trying to play, is trying to help this firm bridge that gap between what is great technology and a great universe of client relationships in native crypto into a much more broad crossover universe of institutional buyers and participants, and that's happening already in a big way.
So as you make that jump, that leap, but now obviously with Zappo in your background already, what have been your surprises? I mean, based on the kind of positive and negative side about the opportunity for you and for the industry? So
the two big surprises for me in crypto overall over the past 2+ years. First is this expectation among the native crypto community that we will live in a world of hundreds of exchanges and market makers. And I think if you step back and you look at traditional finance, the equity businesses globally were largely built as exchange-traded businesses. And that process led to, they were exchanges all over the world, and as those markets matured, there's been considerable consolidation, and there's a huge network effect that happens in the global equity markets. The fixed income and currency markets traditionally have been OTC markets. But even in those OTC markets, there have been brokers, and others that stand in the middle and create more of a network effect for those markets. Crypto has grown up with some notion that you would have exchanges all over the world and market makers all over the world, and everybody was going to make it independently. And so personally, I think that's a somewhat naive view. I think there will be a huge network effect or consolidation process that happens, particularly as institutional investors come in and demand to get themselves to the one place that has the most liquidity. And if it doesn't exist today, they'll force a change that creates it. And I think that process is going to be a cumbersome process for the native crypto community, but I think it's already underway. The other thing that is interesting coming from traditional finance is this has been a market, particularly in the past 2 years, that's had obviously tremendous volatility. But where there has not been volatility, where there's been a raging bull market, is in the human capital space. The number of very experienced, sophisticated, intelligent folks from traditional finance that are leaving big jobs to come over has been pretty astounding, and I think it's been underreported. And so from where I sit, 10,000 or even 20,000 of Bitcoin today is a very different 10,000 or 20,000 than it was 2 years ago, largely because the infrastructure of people that's been set up to really take advantage of this space as we go through the next bull run.
So I couldn't agree more about using the flow of human capital to dehumanize it like that as a leading indicator of opportunity. That's perhaps even more so in the venture space.
Yeah.
And looking at the applications that are built upon these digitally native assets, that's a super strong leading indicator for us, and we see that very much also. So in spite of that kind of, and I'm on the record, by the way, in a kind of impromptu chat with the Financial Times journalists, stating that, in fact, that I think that the crypto capital markets are going to consume today's capital markets. And I think so. We're seeing perhaps a rising tide, and we're going to see perhaps this growth that maybe is going to outpace some of the consolidation. Despite that, it's always good to have something you're particularly strong at. So, maybe for BitGo, it'd be great to share, up to date now, what are your core areas of business, and how do you make sure you stand apart amongst the growing crowd?
Thank you. We started, the business was founded by Mike Belshie, who's a brilliant technologist, as largely as a hot wallet technology solution. Really as I think my bias is certainly the most sophisticated and best built hot wallet technology that had, and today has, the most user-friendly API connectivity in the market. So as you can imagine, we have a huge business building that and using that, developing that technology for use by exchanges and market makers around the world. A couple of years ago, that business also diversified and grew into a qualified custodian, South Dakota-based qualified custodian. And we are today among the top 3, and we vie for that position. We're probably even among the top 2. For total assets under custody. We never quote the number. I'm asked all the time, and we never quote it. But I know where we stand relative to those who do quote it. We're in a very healthy position in terms of the custody business. Today, we announced via a press release that went out this morning that we've developed and have just launched custodial entities in Switzerland and Germany. So our footprint has grown into Europe in a more meaningful way. It's a very big part of the forward business for us. Today, already, about 50% of our total customer business happens outside the U.S., split somewhat evenly between Europe and Asia. But we think the forward we think the non-U.S. forward is huge, and so we're growing to build it out.
We always like to hear that. I'm always fond of pointing out that London has sometimes in spite of itself, a very important place in the world. Historically,
Definitely.
Culturally, financially. So even though you're not opening quite in London, it's good that you're coming close. And we also see tremendous opportunity across Europe for this new wave of assets, and backed, I think, a lot by, for example, efforts by the European Commission, but also individual states to really battle to create great jurisdictions from a regulatory perspective. Earlier in the day, the comment was made that perhaps this regulatory question is kind of behind us now. So I'm interested whether you think that's true and for how long has that been the case. But perhaps if it is behind us, what's holding us back, or is nothing holding us back?
Yeah, I don't know that it's entirely behind us. I think that's aggressive, but I do agree that that a lot's changed in the last 4 weeks. I mean, we've got some clarity out of BaFin now, which is one of the reasons that Germany was an important jurisdiction for us. We've known that Switzerland's been quite crypto friendly. jurisdictions in Asia are becoming more clear. Japan's got some clarity around how custody will work and how to hold private keys. And then, obviously, the comments by the SEC commissioner were a surprise and a positive surprise. Certainly, we live in already a better environment for regulatory clarity today than we did even 6 or 8 weeks ago. But I think there's more to do there. I've lost your other question because I got distracted by the.
Well, I guess the hubbub outside, but the question is like, is regulation as an issue behind us? And assuming that to some degree, even if it's recently in the last 6 to 8 weeks, you say that it is, why haven't the crypto capital markets already won? What are the next steps?
So what else is in the way? I think I think volatility scares traditional institutional investors. I think the level of volatility that exists in this space is unlike anything they've ever seen. And we live in a pretty high vol environment, particularly in the equity markets, given the tech revolution. I think valuation metrics matter. It's quite difficult to, and when I sit down with institutional investors that I've known for years who run big businesses, and they start asking questions about valuation metrics, frankly, there aren't good answers. We don't have, as an ecosystem, a way, and there's a lot of work being done on it, and the research is great, and we're headed that way, but we don't have a traditional system of valuing assets that meets what traditional financial institutions are used to. I think the security issue has been a problem. The concept that everything in traditional finance is reversible and everything in crypto finance is irreversible is kind of horrifying for someone who's managing third-party capital. So they're going through the process of overcoming that. And as mentioned earlier, over the past 2 years, there's been a considerable amount of work done for traditional financial institutions to try and understand what are private keys, how do they work, how do we custody them, what does all that really mean for me as a fiduciary. So I think we're making great progress, but regulatory clarity, valuation metrics, the fear of volatility or how to get your arms around volatility, what crypto security actually means and how to deal with it. And then lastly, and frankly, most importantly, these are businesses, right? These are businesses that are led, financial institutions are led often by their clients. It's not the reverse. The great fiasco that took place pre-2008 of the mortgage bubble was not something that was created by Wall Street out of thin air. They were led there by this huge demand for yield that existed by their clients. So until we see the clients of big financial institutions clamoring to own these assets, we're not going to see them come in a huge way. We'll see them now dabble and learn and build teams to figure out how to do it and put millions of dollars to work, which to them is a pittance relative to what the tidal wave will be. It's not going to happen until they have the demand come from their clients.
So maybe picking up then on the question of valuation, because that tends to be something that gives clients reassurance that they understand the fundamentals applied here, and I guess it's pretty important to split it into different areas. There's kind of forms of money and store of value. There's tokenization of existing assets, and then there's this new concept of utility tokens or tokens that are native to the function of these new decentralized data networks, broadly speaking. And for the record, actually, we're bullish on all of those, and we also, there's a lot of people, super smart people, working on the valuation approaches. Just curious, I don't know how much you could drill into the work you're doing there and the models that are emerging and how you start to kind of reassure clients that there's fundamental value.
Yeah, we don't do so in our role. We don't do a lot of that work, candidly. We
any strong collaborators that you would advocate working?
It's hard to do because we have so many.
Right.
We essentially act in a custodial function we've grown to the point in the API connectivity that was built and the user friendliness of BitGo's original technology, which has constantly been upgraded and is a great technology, is such that I think we have 190 exchange clients today and greater than 50 market makers. So when I'm in an environment like this, I have to be careful.
You have to be Swiss.
Yeah, correct. I have to be Swiss. But I can tell you that the the work that's being done today, and and you're seeing it, it's coming, you're seeing research that gets delivered every day, relative to the world that I came from. And you know, the majority of my career was in emerging market economies, so it was pretty sophisticated work that was being done. There's really good stuff now starting to come out of these crypto firms. There's a universe of research that's starting to arrive that answers difficult, seemingly simple but somewhat difficult questions every day. So I think it's getting easier and easier for institutional investors to start to fit their brains around how does that compare to what they're used to. I had a fund manager say to me recently that half of what is needed is, and this is a traditional crossover macro hedge fund guy, who works at a big firm that has a sophisticated investment committee. Half of what is needed to get to the next level for these guys that are, you know, at each of these firms, you'll have a few people that are actually very crypto friendly and have been involved personally for some time, is just the ability to paper the file at the investment committee that they had some process of valuing. Of valuation metrics to make those investments.
Yeah, so we've seen that too. I mean, early stage investment, we're a little bit more used to dealing with kind of the witchcraft model of valuation, which is kind of all about incentivizing stakeholders at the very early stage to build something valuable over time. But nonetheless, we see some really interesting players like Hash and Spartan and Delphi building out the models and the papers on different projects that I think help support that. So switching back to this question of securities, you said that how terrified some clients can be, or indeed, you know, especially clients who are managing third-party money. That probably brings us to the question of insurance. You know, what are the approaches you've been taking to insurance? I mean, is this something that you believe, again, we're well down the track, it's solved? How does pricing work? Who are the key players you see
I think it's
emerging?
getting solved quicker than I expected. So we're biased because we believe we were pioneers on the insurance side of this. So that's our bias. But that's now that business is already becoming relatively quickly commoditized. We have a policy in place that was put together by a consortium of Lloyd's of London consortium of about $100 million. But it's a comprehensive policy. It covers theft and hacks and bad actors internally and all the things that you would want to cover. We also recently have been able to put together bespoke insurance, and we've not rolled it out as a product, so I guess that's a bit of an announcement as well, in which a client of ours, and we've done one of these transactions in Asia, a client of ours can come and actually buy bespoke insurance for their funds with us. So you get the benefit of the BitGo policy, and then on top of that, you can have a policy that's specific to you and specific to your funds. And I can't quote pricing here, but I would do it certainly individually. I was shocked at how inexpensively it was priced for what the risk is. So, and it's unclear to me what amount of capacity exists in the insurance industry overall for this. I'm sure it's limited, but already the insurance industry which has done a considerable amount of due diligence on us and others. We have a SOC 2 Type 2 designation, and they've gone way down the rabbit hole of all of that, and our process and how vaults work and what cold storage is, et cetera. And I thought they were going to do all that work and come back and price at a level that was priced out of the market, and they did the opposite. They priced at a level which suggests to us that folks that are in the business of pricing risk and esoteric risk have determined that in a certain profile, done a certain way, that risk can be priced relatively inexpensively. That coverage, rather, can be priced relatively inexpensively.
I think that's a fascinating little kind of, you know, little bit of news. But the fact that you can tailor the insurance product like that, I think that reflects some of the intrinsic nature of these new digital assets and the infrastructure that they're sitting on, that it's programmable,
right.
And that you've got to address a broad set of clients, so you need to be able to adapt it to their different needs. And I think the fact that you're getting pricing that you think that is competitive is going to support your scaling and so forth. I mean, again, reflects some of the underlying nature of this environment, which I think is a fundamental advantage over historical capital markets. The fact that it's so data rich, it can be automated so well, and that as we now get used to the language and the structures and so forth, and people get regulated, it's people, insurers can look at it and say, like, this is quite deterministic. I can understand exactly what's going on.
And I also think, and that's a good segue to a point, that there's this expectation, which I agree with today, and I agree with partially, which if you're an institutional investor and you're a fiduciary of someone else's capital, and you're making the decision around custody, today, in my opinion, the decision tree is is somewhat binary or somewhat split. Who's got the best technology? Who can I believe is the safest? Who's got the biggest balance sheet? So if I'm wrong, I can sue them, right? And I think Danny or someone mentioned that earlier. And I think that's largely true. And the win is who's got the biggest balance sheet but is also the safest, right, if that firm exists. So we have a bias that we're the safest, and a lot of the market believes that, and others that are in the custody business here will debate that, and that's fair. But this notion of who's got the biggest balance sheet is an interesting one to unpack a bit, because pick a name. I don't want to name any of the folks that are in the business already because it's unfair, but if a very large international, if one of the top 3 international custodians today spun up a big digital custody business, and let's assume they did that in a way that they went out and marketed it, and they brought in $20 billion. Let's just use Bitcoin. They brought in $20 billion worth of Bitcoin over the first year, which is easy to imagine, right? Bitcoin rallies. Okay, so they have $20 billion worth of Bitcoin against their market cap. I feel comfortable that I can sue them if they lose my Bitcoin in some capacity. Bitcoin rallies to 100,000 a coin. Now they've got $200 billion worth of risk against their balance sheet. So 2 things. A, are you going to be able to sue that firm anymore? And B, are they even going to allow that risk to exist in that way? Or are they going to consolidate that risk in some way that it is completely off balance sheet or managed in some capacity that makes it impossible to sue their core business? I think that's where we're going. I think we're going to a place where this notion that as soon as the majors come in, I don't have to worry that much and understand security that well, because I think I'll have some big balance sheet I can sue. That's a flawed concept, in my opinion, because when the institutional capital comes in a way that we expect that it will, which is also our bias, right? We're all here because we expect that's happening. The markets are less liquid, and this is just a personal perspective, my experience in traditional finance. These markets are much less liquid than people realize. The rally that comes when traditional crossover comes is going to dwarf any rally that's happened in the past. And we can meet outside, and I'll spend hours debating anybody who wants to debate that. I've seen it in emerging markets. It will dwarf what's happened in the past. And I don't think this notion that you're just going to be able to sue your custodian if he makes a mistake is going to hold up over time. So it's really important to understand what this custody function is, to understand the model, to understand how people secure these assets on your behalf. And it's important for the insurance industry to catch up and to develop in a way that can secure these assets from an insurance perspective.
So I saw those statements, I saw a ripple of, no pun intended, of smiles across the audience at your previous statement, and so you may actually be cornered for that conversation later. But picking up on that, and maybe 2 for 1 for you. If you think about the folks who are now making deposits and perhaps there's trading strategies they're looking to employ, what is the nature of those deposits coming in, and what is the nature of the trading strategies? Is there anything particular that you're having to do from a custody perspective to adapt? And I'm going to see if we can cram in 1 question from the audience right at the end, which is a very dangerous thing to do. If there's anybody got a question they want to pose, Peter, just start thinking about it now and putting your hand up early and vigorously, and then we'll try and put that in. So back to you, Peter.
So I think the answer is no to specific trading strategies. We are, in my opinion, as poised on the launch pad as this ecosystem's ever been. And I would have said that a year ago. Unfortunately, that's the reality, is I would have said that a year ago. And so what's changed? What's changed is that even more fuel's been put into this rocket for an ultimate move. And I don't want to be the one who is I don't want to be the kind of the snake oil salesman that it's only going to go one way. And I get the reality of volatility, and I get that this is all a grand experiment that has potentially binary outcomes, and all that I agree with. But every single major financial institution that we walk into today, and we're fortunate because we have a seat at the table. I mean, Mike's built a great business, and we're fortunate to be part of it. We're also quite fortunate because the history of that means that we can get into pretty much every location, every firm that we want to try and get into. So it's and we've built a sales infrastructure that is global and broad and really now reaches out to a big universe of crossover hedge funds, traditional money managers, native crypto in a huge way globally. So we've got a very wide, broad section of views, a cross-section of views that we're now kind of consolidating. And the one big takeaway is that everybody's doing or has done the work. It's a big deal. I mean, the 3 years ago, if you walked into a Boston-based top 10 asset manager, the crypto team was two guys in the corner that also had other jobs, but they were the crypto team. Now when you walk into one of those firms, you sit down with the CIO, the CTO, 3 senior portfolio managers, and a specific team that's been put together just to consolidate and work on their crypto infrastructure internally. So when this really starts to happen, we now live in a world, and I have no sense of timing. As many opinions as are in this room exist, and I just seem to have one. But when this starts to happen, and I mean the true adoption from the institutional investment community, we now live in a world where a lot of really sophisticated traders and financial markets people who didn't grow up as technologists, but who manage considerable amounts of capital across many, many asset classes are fully up the curve, understand how they want to do it, what firms they want to use, what custody is and looks like, and securing keys really is all about, what offerings they would likely launch with their client base and how it fits, what the regulatory environment looks like and why, how broadly they want to go, or how deeply they want to go into the universe of other coins from the core coins. All of that work is constantly being done by firms that are big financial institutions. So we're quite well poised for something significant to happen.
So this gentleman here was a super fast. So quick question. We've just got a couple of minutes left.
Sure. I was really interested in what you said about valuation, and you're working on that. Oh, it's Robert Anderson at DAG. You mentioned valuation, and you're working on that. You haven't got an answer yet. Well, no one has. But what will the model look like?
No, we're not. I said we don't do that work internally. We have a lot of other clients, however, who are working on that aggressively. My personal view is that valuation models will look very similar to traditional valuation models, because I think that's the menu that traditional finance is going to want to eat from, frankly. So I think that you're going to see, you won't see the crypto community take the traditional financial community and spin them into some new experience of how we value assets. You'll see the reverse. That's just my opinion. You'll see the crypto community largely take this asset base and create valuation metrics that fit what are closer to traditional models. And that I won't debate anyone, because I'm not smart enough to debate that. But that's a personal view.
So any more questions before just a quick one here?
There's a multi-trillion-dollar gap for the Sustainable Development Goals. I just wonder whether you can comment how digital assets or BitGo potentially could contribute to filling that gap.
Geez,
I don't have a view. You want to take a crack at that? I don't really have a view.
Yeah, I mean, I have a view, which is, first of all, I think it's a good question and clearly, worthy sort of purpose. But other than that, I think this is a super high level. If we believe that this combination of applications, we call them Web3 applications, decentralized applications, that can have at their heart this new breed of digital assets, starting with a whole movement to kind of open finance, decentralized finance, really will drive a level of inclusion and financial product innovation that we've seen nothing to date on that level. And so I think in those words, you can immediately see an opportunity for developing countries to leapfrog, for smaller businesses to be funded. But I think on top of that, I think we have to remember that data is being turned into kind of a tradable, traceable asset. And so I think the opportunity to make supply chains transparent, to understand the sustainability, the ethics, and so forth, and all of these things, inclusion, sustainability, and so forth, feed into those goals, those SDGs. And I think there's a great opportunity. So thank you for the question. But to wrap up, you didn't hear any investment advice here tonight, but I think you've heard, or today, maybe you will tonight. But I think we perhaps heard the fact that there's an agreement, at least from this viewpoint, that the spring is coiling in a number of ways. We see great software being built. We see the security and valuation questions being addressed, and very excited for the future. And with that, I'd like to make sure that everyone gives a big round of applause to Peter and thank him for coming.